So let's talk about what is likely going to be one of the top priorities for his new administration, and that's the economy. Inflation rose 2.6% last month. That is raising some eyebrows because it's up from September when the Federal Reserve started really cutting interest rates after signs of cooling prices and then a weaker labor market. That slight rise, signaling the Fed's goal of 2%, might take a little bit of a bumpy path over the next few months, and we are watching the Dow as it reacts right now. So let's bring in CBS News contributor JD Durkin. JD, we are hearing right now that the numbers are not cause for panic, but we've also been told that these interest rates can hinge on inflation numbers. So break it down. What's true here?
Yeah, Reed, they exactly hinge on inflation numbers. And it's worth knowing here that the CPI inflation print, this data we got today, not the most important piece of inflation data the Fed takes into account, but it is kind of a part of the overall dashboard that policymakers at the central bank take into account for the fate of short-term interest rates. And don't forget, we got another potential interest rate cut coming up in December. And I say with strong potentiality because these numbers today seem to reaffirm for market participants that rate is coming. To your point, it is very much a mixed bag. Shelter costs have gone up. Food prices have gone up. In fact, 5 of the 6 major grocery store categories rose from September to October. If there is a bit of good news in the numbers, it's the third index, the third tranche, and that's energy prices. Read down 4.9% in October 2024 relative to where we were a year ago. A handful of things across the U.S. economy, I should note, they are cheaper today than they were a year ago. Household appliances have come down. Bacon, for any fans of bacon, now it's 3.5% cheaper today than it was last year. And if you've been in the market for a flat screen TV, the good news there, television sets, TVs are down 4.5% from where they were 52 weeks ago. But overall, Reed, we like to say on Wall Street, the trend is your friend. After a long period of sustained disinflation coming off that 9% number we had in the summer of 2022, we've really made significant progress. The unfortunate reality is we've just kind of been moving sideways, a little bit stuck. So the Fed certainly has its work cut out for it.
And there's always that conversation about earnings as it relates to inflation. Where are we there? When will Americans start to really feel the impact of that, the differentiation between earnings and inflation?
Yeah, unfortunately, there are so many wild cards at play here, not the least of which are the incoming policies for the soon-to-be Trump administration. What's the impact on Trump tax cuts? What's the impact from Trump tariffs? What are the labor shortages or labor force participation impacts from things like the promises of mass deportations? Bankrate is the name of a financial services firm right here in New York City, and they estimate that really Americans will start to feel wages significantly outpace inflation and really feel it in their day-to-day economy by the end of the second quarter of 2025. But again, there's a lot of other factors at play here, Reed, that could significantly disrupt that progress that has been made on real wages rising, and of course really underscores the challenges for the central bank. We heard from Jerome Powell and other policymakers at the Fed last week to say, we're going to take a wait and see approach. We're not going to be too reactionary to the promises of changes in spending policy on Capitol Hill. We will continue to be data dependent. And I know people want to know when they're going to feel that relief from all the high prices. But the reality is these things take a long time, and economists are doing their best bet to try and pinpoint at what point in the future Americans in the day-to-day economy will really feel that relief.
Well, and let's not forget, we're coming up on the holiday travel season. While I have you here, I want to get to this. Spirit Airlines moving towards bankruptcy, we're told. That filing could occur, we understand, within weeks. What do travelers need to know?
Well, travelers need to know, unfortunately, there is a history of major airlines basically coming up to the point of bankruptcy, potentially facing insolvency and having their flights canceled outright. Reed, you might remember back in 2019, there was an Icelandic transatlantic airline called WOW suddenly hit bankruptcy, leaving thousands of passengers stranded at the airport. That is something no one wants to see. What happens historically in situations like this is you have other airlines who try and come in and help pick up some of the slack, as happened with WOW back in 2019. But the numbers are simply dismal for Spirit. The stock is down 60% today alone. It is down almost 90% from the start of the year. This after a proposed merger with Frontier collapsed. A proposed deal with JetBlue completely collapsed. So we don't know exactly how this is going to play itself out. The Department of Transportation does say you may be entitled to compensation. You may be entitled to be able to work with another airline. No need to panic right now, but there is precedent, I think, for passengers, if you have flights booked on Spirit Airlines, to be in touch with the airline directly, and hopefully everything pans out for your holiday travel plans.
Yeah, you've literally got to get over the river and through the woods and watch your Spirit Airlines reservation. JD, thank you so much for talking to us.